Hello, everyone. Thanks for tuning in today. If you're new here, thanks so much for joining me. If you're a repeat viewer, welcome back. Glad to have you all here. In this video, we're talking about Domino's Pizza, and I'm inviting back Chris Markoch to discuss this slice of the market with me. Chris, first we talked about McDonald's, now Domino's. Why are we always talking about food?
Laycee, is there ever really a bad time to talk about pizza?
All right, you're right.
Well, actually, there might be a bad time to talk about Domino's Pizza. That's today, because the stock's down sharply. It dropped sharply last night after the company reported some mixed earnings, and it's down a little bit more today. So we're going to talk about that, what investors should think about that, because, again, it's going to be all about their guidance going forward. But if you want some good news on the stock, I would think about, you and I did talk about McDonald's and how McDonald's was using technology effectively. I think the same story applies with Domino's. And so, if investors are looking for a little hope, I might be able to give them a little bit of hope on that front.
All right, definitely sounds like information investors need to hear. I'm anxious to dive into that. But before we talk about that, everyone, please take a quick second to hit the subscribe button. We want to continue to grow this channel so we can help you stay ahead of the market. Don't forget to leave us a comment down below, letting us know your thoughts on this analysis. And when we're done here, what you would like to see next. All right, back to what we're all here for. Chris, what did the earnings report say?
So Domino's did what a lot of companies have been doing. They beat on the bottom line, so earnings came in higher than expected, but revenue came in lower than expected. Now, there's two stories going on here. First, this is a pattern for Domino's over the last several quarters. They come in with earnings that are higher on a year-over-year basis, but revenue comes in lower on a year-over-year basis. That's not something that analysts like to see. But the bigger issue was Domino's guided forward, and they said their their 2 to 3 year sales outlook was going to be around 4 to 6%. Their prior estimate was for about 8 to 10%. So investors really didn't like to hear that. And that's probably a lot of the reason why the stock is dropping, in addition to the fact that the PCE number came out to show that inflation was going to be around for a while.
So is this an inflation story, Chris?
I think in part it is. As I just said, the PCE index came out today to show that inflation is going to be around. And Domino's has struggled with that over the past year. They've fought commodity prices, which raise the price of their ingredients. They've also been dealing with higher labor prices, and like we said, that's not likely to change anytime soon. So, it is an inflation story, but I think it's also just a story of investors are just trying to figure out where they can find value right now.
All right, you said investors might want to think about Domino's the way they think about McDonald's. Can you explain a little bit to me what that means, really?
Right. So if you've invested in Domino's over the past 15 or so years, you've done really well. I mean, so you have to start asking yourself, what does it mean to buy Domino's as we're going into a recession? So what I looked at was, I said, the last time we were in a recession was around 2008, 2009. And Domino's stock dropped from a high of over $30 a share to under $5 a share. Now, I'm not suggesting one bit that shareholders are going to see that kind of a drop in Domino's stock from a percentage standpoint. That was due to something completely different. At that time, Domino's stock was dropping because consumers simply didn't like the taste of the product. They were saying that Domino's compared to Chuck E. Cheese pizza. Now, as somebody that I've raised kids through the Chuck E. Cheese stage, I've had my share of Chuck E. Cheese pizza, and that's not a compliment for Domino's. So, but they've adapted their menu since then. But more importantly, what they did at that time was they really embraced the digital age. And what that's allowing them to do is do more algorithmic pricing. And this really showed up for them during the Super Bowl. They sold like over 100 million pizzas on Super Bowl Sunday. And the vast majority of those were done through the app. And what one of their executives was explaining was that because those orders are coming in through the app, they collect a lot of data on the customers, and they can see exactly where the customers are deciding to either trade up or trade down. What are they not willing to do? And that's led to something like their mix and match deal. For a long time, actually, I think since around the time of the recession, they had a mix and match deal that was around $5.99, and they only recently increased that to $6.99. That's all because of this pricing model that they have, where they're collecting this data and they know what's working with their customers and what's not. So if you believe in that, that's a good reason to think about maybe sticking with Domino's, because they may tend to have a more have a better grasp of what their consumers are willing to do as far as pricing. Another part of that technology story is the fact that you may have heard that they've invested in, I think, 800 Chevy Bolt electric vehicles. Now, that may seem kind of obvious, but one of the things that they mentioned was they're coming upon a situation right now where they have people that are willing to work for the company who have driver's license, but they don't have access to a car. Mm-hmm. So what Domino's is hoping is that by having these vehicles available, they may be able to capture some of that traffic where you can get these employees and say, we'll hire you and you have a driver's license, and now you can drive around in a nice EV and deliver the pizzas. And so they're hoping that that might help some of their employment staffing issues.
Mm-hmm. All right. Should investors be taking a bite out of Domino's? It sounds like another one you may be putting in the hold category. That was a little cheesy, Chris. I apologize. Oh gosh, the puns just keep coming. I need to stop. They're not funny.
So I do. And as somebody that doesn't own the stock, Domino's looked a lot more appealing to me back in October when it was hitting near its 52-week low. Now, actually, though, now if the trend continues, Domino's may be approaching that 52-week low again after this dip. And that starts putting the stock down. If investors really take a wider lens of the stock chart, that starts putting the price down around pre-pandemic levels. And so that's where investors start having to ask the question, okay, is the stock dropping now too far? Has it been punished too much? And that might be a time to get in. For me, I want to see the story play out for a couple of more quarters. So I want to let things settle down. One thing I was looking at just before we came on with you is it's always interesting to see in the days and weeks following an earnings report what the analysts have to say. And there's been several price targets that have been lowered on Domino's. A couple of people even downgraded the stock to neutral. However, some of those price targets are still well above where the stock is trading now. So Domino's doesn't have the most attractive dividend yield. It's hovering like right around 1.9%. Analysts, and if they have sales that come in around 5%, it's a judgment call as far as whether you want to hang out in Domino stock. For me, like I said, I'm probably going to wait a couple of quarters before I even really look at it. But again, if you're looking for a stock that's going to pay you a nice dividend and might offer you some stability in a turbulent market, Domino's might not be a bad choice.
All right, Chris, let's wrap this one up here. Thank you to everyone who joined us today as we talked about Domino's Pizza and its potential in the stock market. I hope you found my discussion with Chris insightful and informative. Remember to hit the subscribe button and click the link in the description below for a free trial of MarketBeat All Access. And before we go, let's leave you with some food for thought. Just like Domino's Pizza has adapted to changes in technology and customer preferences, as investors, it's important to stay nimble and adaptable in the ever-changing market. Thanks for tuning in. We'll catch you in the next one, Chris.
Thanks, Laycee.